So if you all don't mind, why don't you turn your cameras on and say hello?
Oh my gosh. We're not all presentable.
And if you have the worst hairdo, even better.
It's called the Saturday hairdo.
Yep. You know, that's why I went for a haircut so that it wouldn't be an issue. Yeah. So,
You should have asked that before you started recording.
oh man. There we go. There we go. I'm waiting for Lasagna to turn her camera on, then we can get this show going. Let's see. There we go. Awesome, awesome, awesome. She even had to pull out her baseball cap over there. Just hey, Helen.
Hey, Eddie.
Right. Nice, nice. So, how old is she?
She's two.
All right, two. All right. Very cool. Hey. Hello. You gonna be an optionista? Hi.
You teach everybody, Eddie.
Huh?
That you teach everybody.
Oh, absolutely. Yep. Yeah. Start them young.
Yep.
All right, babe.
All right. Hey,
Oh,
thanks for
okay.
joining. All right.
All right. See you later.
Good to see you, Steven. Cool. So I guess today we can talk about gaps. Anybody else have a topic that's burning on their mind? Questions? How to play? How not to play?
That's the main thing. When to get in and when to get out.
Yep.
So I had a quick question though.
Sure.
I know when you do your .50 move, and I know you don't buy more than 3 contracts at a time.
Yep.
Do you let it go further than .50? Do you change it to 3 maybe? $3? You're trying to get it to move $3 or $2?
So I've been trying a new trick, and this new trick actually I tried it the very first time yesterday, and it paid off. Paid off big time, of course. But what I've been noticing is that when I get in the morning, let's say I get the direction correct. If I get the direction correct, I notice that I do a plus 300, right? So my first trade is going to give me like $900, because if you buy 3 contracts and you do a plus 3, then 3 times 3 times 100 is $900.
Right.
And I noticed that first trade is usually my best trade, because I got it at a low premium, and it ends up going to $24, $25 higher than what I bought it at. I'm like, well, if I could go back in time, I should have just either bought more or stayed in the trade. Right? Stay in the trade so that I can rip it off. So my new strategy that I'm trying is what I did is I decided that, and I bought these ones for $16.80. The ones that I bought yesterday were $16.80 a piece, so I'm going to call it $1,700. Okay, so 1,700 times 3 means that I was investing $5,100. You with me so far?
Yes.
And I did a plus 3, and then I removed the take profit. I decided, all right, here's what I'm going to do. I'm going to risk $5,000. And I'm going to do other plays that make up that $5,000, such that if I lose everything of those first 3 trades, then I'm not gonna go broke. Obviously, if they start reducing, I'm gonna cut the trade and try not to lose anything. So the very first 3 that I bought, I did not sell until later on. All the rest that I bought, and that's why I call them runners, the 3, because I bought a total of 7 contracts, and I let them run for a little while. Those first 3 are the ones that made me a ton of money. Because first of all, they were deep in the money. They were Delta 75. They were not even Delta 50. I was going for the kill, because being a Friday, I wanted to get in, get out, and so I let them run. And I was, every time I wanted to cut, saw a small wick of red, I was like, all right, I'm going to sell now. Thing comes right back up, and I was watching everything else. ES was going up, DJ was going up, DJI, sorry. VIX was what was it, decreasing. Everything said we're going up, so I left it in. Well, when it went to 5 digits over 10K, I was like, it's not usually this good on a Friday. It's time to get out. So I cut it, and that was that was before 10:30 in the morning yesterday. 1 hour of trading only. And anyway, I had to go somewhere else, so I decided, cut your trades, or rather pick the gains, go out, and just whistle all day. People were looking and be like, "What's up with this guy?"
I was happy,
Yeah,
but I only had 1 day trade, so I couldn't go back in.
and that's usually okay. It's your plan, right?
Yeah.
Yeah,
But I covered the day before also, because I was only trying to make 500.
yeah,
The day before I made $60.
yes.
So that day I made 900. So I was like, you know what? That's good.
And when you round it up, that's like $1,000, right?
Yeah.
That's the way I do it. To me, 900 or 1,100 is 1,000. You just round it. It's approximate. It doesn't have to be 1,000. It doesn't have to be 500. It just has to be positive something. That's the way I look at it. So I'm always grateful for those days you just get out positive. It's always a good thing. That's the way I look at it. So I do not mind those days. 3. So hopefully you all understood what I said. What that strategy. What am I sharing?
SPX.
Nice. I just got to make sure that I'm sharing the right screen.
There goes that gap. I said it that morning. I said it's gonna cover that gap today, and I didn't go for the long. I was scared, so I said no.
So Steven, are you doing a +3, or are you just buying and
No, I did a
Jump-
+3.
+3?
Yeah, 3 contracts +3.
Okay. Yeah. I think a defined strategy is great. If you can do it, most of the time. If not, just because the other way, the alternative where you leave it to run, there's a lot of risk with that, and that's why I don't like to let it run like that. Instead, I still prefer the +3, +2. So all right, what am I looking at here? I'm looking at SPX and trying to answer this question about gaps. The gaps that we are referring to is this one, and then of course there's this one that we filled yesterday. Are there any other gaps we're looking at? We'll switch to the 15 just to see what's happening, but we do have some gaps below that we have to be careful about, right? So we've got this gap from yesterday that we created. So we created a gap below yesterday's price, and we filled one above it. So everybody's happy. And then there's the next one, which I'm pretty sure we're going to. I'm positive we're going to fill this one. When we fill it, I'm not. I don't know. So let me draw some lines here. And this is the gap that we're referring to 3974 to 4017. That's a pretty nice gap over there. 39. Yeah, $43. If you can get in at some point and go long on these for a few days, you'll be swimming in a ton of cash, which is desirable. Then there's this gap over here, which is 38.21 to, well, let's just go to the top of the week and say that is another 20-point gap, give or take. Right, 20-point gap, give or take. Depending on who you're talking to, this might be a gap or not. Right? So there's a small gap over there, but we might come back and feel it. You never know. And because this is SPX, we like solid filled gaps. So if we decided to test this area again, that would be a huge test. That's 300 points away. So I'm leery about whether we're going to go back, especially over the last few days. This is has been the trend, right? Higher lows.
Yeah.
Except one day we had a lower high, but in general we've been trending up.
Excuse me,
Sure.
can you draw the line for that lower gap, the lowest gap, please?
Sure. That one.
Yeah.
And this is very, very small. This is like 8 points. 15 minus yeah. This is like 8 points, but knowing SPX, it might consider these as this area to fill. We like solid gaps, solid candles on SPX.
Okay.
Yeah, on everything else, this is once we fill this small gap, that's considered filled. But on SPX, and I haven't proven this completely, but in general, that is what I have seen with SPX.
Okay.
Yeah. So there's that. Beyond that, let's go and switch to 15 minutes just to see what we're looking at here. All right. So on 15-minute, obviously, there's this one that we created yesterday. This is known as a bull flag, by the way, guys. It's a bull flag, right? Right here. That's your bull flag. After that, and it only goes a few candles. It doesn't go a lot of candles. After that, it stops being a flag, and now you're just dealing with regular stuff.
Why is it called a bull flag?
Well, it looks like a pole, and this looks like a flag.
I don't see the bull. I see the flag.
Yeah, bull flag. Bull means
Oh, got you. I see.
bullish,
Yeah.
as opposed to bear flag.
Yeah.
Yeah, you're not looking for. Yeah.
I'm just kidding. Hi.
Oh boy, this is gonna be tough, man.
That's what you do to us, okay?
What did I sign up for?
You do to us.
Okay, all right, you got me on that one. You got me. Yeah. Bullish formation flag.
Oh God.
There we go. So there's that. I am going to customize this, and I'm going to add a new time frame. It's going to be intraday. The aggregation is going to be 15 minutes. Interval is 1 day. I'm going to go with 180 days, 15 minutes. And I'm going to add that. Apply and OK. What the heck am I doing?
Customize your time.
I am looking for gaps on the 15-minute, and I'm trying to go. Let's see, I'm trying to go maybe 20 days is what I should have gone. Here. We've marked that one. Yep. So far, the only flags or the only gaps coming up are in this region, and we've already marked them. So that's all I see. This one has already been covered in full. That one has been covered. That one has been covered as well. It's interesting to see yesterday's reaction. Notice that we spent a lot of time covering this gap over here, right?
Yeah.
We spent a lot of time, but we made sure that it was covered, really well. This is the one that we were playing from yesterday. So next week, I don't know. There's a small jump over here that we have to go through before we attempt to fill this one. So don't play tomorrow. Don't play the gap fill Monday unless we have a huge jump, and then you know that we're going to try and get to this number here. So how do we play a gap? The way I play a gap is usually a little different. Well, it shouldn't be different, but you measure the gap. So in this particular instance, for that gap coming up, 39.74 to 40.17, that's a $43 gap, right? Once we have some candles in here touching this line of 39.74, then I'm going to be looking for 60% of that 43, because we don't have to fill it completely in the very first time. So we're going to play it as though it is zone to zone. My zone is going to be from this particular point, 39.74 to 40.0117. So that 43, we're going to be looking for approximately how much? We're going to be looking for about $25. So $25 and change, it puts us squarely, guess where? $4,000. 4,000 mark. Right?
Okay.
Round these up. 39.75 plus 25 is 4,000.
Yeah.
So we know that we have a good chance of hitting 4,000 for two reasons. One, that is the approximate area where 60% is. Second, 4,000 is a very psychological number. Remember that every time we have the 00s, the 3,700, 3,600, 3,900, all of those are numbers that the market or traders generally associate with. We're trying to look for 4,000, or we're trying to look for 5,000, we're trying to look for 6,000. You get the picture, right? So 4,000 becomes an important number. So that's what I would be looking at when I'm playing that gap. Once we hit that 4,000, 17 points is not too far away. Yeah, we can do that in power hour. We did that yesterday. If we go back to the 15-minute, yesterday's 15 minutes was from 00 to 12, which was 15. 12. What am I thinking? 12 points. So 17 points is not out of the question. 10 points not out of the question. So Caroline, that is how I would play that gap.
Thank you.
Yep. And gaps, the way that we look at them is just think of it as just another trade. You're doing zone to zone, so always go with the 60% expected movement, and then do your calculations from there.
Yeah.
No different. It's just they provide extra opportunity.
All right.
Cool.
Thank you.
Not a problem. You're welcome. Cool. So when to go in is the question. Well, that was the other question, right? So when to go in, this is like the most the classic question of how do we trade? And I always look back to the basics of, so everybody knows that we buy low, sell high. Is that well understood, you think? Right? We're buying low, we're selling high. So the question is, where is the low and where is the high? So to answer the question, where do we get in or when do we get in? The answer is when we are at the low or when we are at the high. When we are at the high, we're trying to get in to go down. When we're at the low, we're trying to get in to go up. So that to identify that, I always go back to the daily chart, which is always going to give me my support and resistance. By the way, I'm going to delete all of this now and Start over. I'm just going to clear my chart, clear my drawing set, and let's do that charting one more time here. So obviously, when you are looking down and to the left, you're looking for the you're either looking for valley or you're looking for a gap below. So my first support, I believe, is this one, which is 3715. You could also argue that my support could be 3636. The reason I put in 3715 here is because of that gap. That gap is forming support, right? It's forming support. So I know that if I hit that, I might have a tendency to fill in that $7 in there of gap before I go back and do my other business. So I'm going to call 3715 a strong support. And I'm pretty sure also that if I go back if I go back in time, then that 3715, guess what? Look at that. That is also support. Do you see how that argument holds? Right? We hit that, we stop, we bounce back. We attend to that 3715, we bounce back twice. Right?
Question.
Yep.
The fact that it hit it so many times,
Mm-hmm.
do you think that's still a strong area?
I think it's strong, yeah. The more times it hits it, the more magnetic it becomes.
Okay.
Yeah.
Okay.
Now, there is a difference though. When we hit an area several times, we tend to break it.
Mm-hmm.
Right? So basically that's called the it's the opposite of the double mountain top. So when we're trying to break resistance, if this were a 15-minute chart, this time it should have broken at this point.
Okay.
Right? If this were a 15-minute chart. So on 15, that is when we look for those mountain tops and the double bottoms. But let's go back maybe 2 years. What did we're 18. Let's see 2 years what's happening. Yeah, that's 3715 is still very strong. We hit it. It was resistance at this point,
Mm-hmm.
right? We pulled back down a little bit, broke away, came back, tested it, broke away, came back, tested, headed up, came back, tested it. Very strong. So 3715. Once we hit that, whenever we do hit that, I'm fairly confident we are either going to bounce back or keep going. And if we do go down, then 36 is what I'm looking for. So those are the things to watch for when you're defining when to get in, or if you're going to wait that long to get in, that's when you wait. Going back here to the regular one. So where's my resistance? I think my resistance would again be this point. Why that point? Because that's the beginning of the gap that is up above us. 3974.
Right.
So you see the argument there. So we have about 3911 to 3974. We're talking about 63 points. That's a very healthy movement over there, and I think it's possible to hit it. So if we hit that 63 points, then we'll need another 43 points to close that gap. And that's why, in my opinion, unless we skip up or unless we gap upwards on Monday, which we will. No, let's better look at this on Sunday night. Yeah, it's still too early. Still too early to figure out. Yesterday, I was actually looking at the futures, and we did shoot up in the after hours, which was signaling an upward trend, a continued upward trend. But you don't know. We've got 2 days of things to happen. Right? We've got 2 things of things to happen. What's happening? We gave up Severodonetsk, and Lithuania now is on the brink of war with Russia. Second country, by the way, guys, if you're not up in the news. So it's disturbing over there. So that could make a difference. So you don't know. Let's wait for Monday. So let's go back to SPX here. So that's my first resistance. If I were to go even further and look for additional resistance, then this would be my next resistance point, which would be 41.68. So that is pretty far away. However, based on how we draw support and resistance, that's where we'll be looking for next time. But for a day-to-day trade or a swing trade, we are always looking from current location or current price to the next or the first target price, right? So being this close to resistance, it could be that we are heading towards that 39.74 area, or if we're heading downwards, then that 37.15, is the area that we're looking for. And always look for 60%. So be sure that if we're going down, you know that we have this gap over here. You see that?
Yeah.
Yep, we have that gap. So let's see. That was I think that was Mary that asked. Was that Mary that asked? Somebody asked that.
Maureen, I also
Maureen, yeah.
went to get out. So I guess it's kind of the same.
Yeah. The concept does not change. It doesn't change regardless of which stock that you are working with. That story is the same, and right now, as usual, everything looks the same. You go to Microsoft, we gap tap. If you go to Meta, same thing.
Yeah.
You go to Apple, same story, right? And I've been watching Apple for a while, so time to reconstruct this. I think use some old trades. Let me go ahead and remove this. Yep, same story. This one's been gapping a lot. Meta is very, very popular right now.
Yeah. It has a gap coming up.
Yeah, it is. Almost everything has a gap, two gaps up above. Jim Cramer has been talking this guy up. If I didn't know better, I would say he got a kickback somewhere. But huh? I would pay him if I was Zuckerberg. I'd pay him some money to talk about me. Right? It's part of business, right? And it's not illegal. So, what else are we watching?
That's mainly what I saw. I saw the gaps and I'm like, okay.
Yeah. Yeah. Trying to see who's on. And yeah, other things that are on my watch list that I've been looking at, not terribly exciting, but I've been looking at some other random things. I'm always looking at swing trades like SOXL. I have a small account that I play that. There's Boeing. We talked about Boeing the other day, right?
Yeah.
And we drew a bearish picture on it, but instead it went bullish. So that's cool. That's hopefully risk management for those who might have entered the trade. And then AutoZone almost filling its gap. I think this might be considered filled. Yeah, it was trying to fill this gap, and it looked like it did that with the gap.
Yeah. Mm-hmm.
Yeah, there was this small one here, but all right. Let's see what else is going on, guys. All right. What are the questions you guys have? Is anybody stuck? Oh, it's going to be a short Saturday then. Unless Maria saves the day. I thought you were going to say something, but you're still on mute, by the way.
Yeah, I haven't traded anything in a while. A couple of months ago, maybe 2 months ago, I think, maybe a month ago, I had bought a put on Meta, and I cashed it out a couple of days ago, right before it started going up again. So I was happy for that, but I don't have anything open right now. I guess I'll be looking tomorrow night.
Okay. I put on Meta. Yeah, that's
It's one that you had recommended. It was a 160, 165 put on Meta.
I think I remember the trade that we did was it last week? 2 weeks ago, maybe?
It was several weeks ago because I wasn't on last week.
Yeah. Okay. Yeah, I think we, as a group, we had actually plotted Meta, and we threw in a debit spread on that. A lot of people cashed in. I think I remember somebody actually cashed like $700 on that. Took 2 days, or 1 or 2 days. So those come in every so often, and right now there's a lot of opportunity. It just depends on how much cash you have available to deploy. But there are quite a few trades that I can see that they're requiring around $500 to $1,000 per play, and those are they have the potential of profit of $300 to $500. So
Preach. I'm listening.
so
Yeah, I like the long-term plays, just holding it, just waiting to see when you can cash in when you get green.
yeah,
So
those swing trades, definitely.
yeah, if I could have a few of those, and then it's stress-free.
It is. Melly is one of them that I am looking to go long on Melly. I see some upside movement. It's got a nice $100 to $150 run on that one.
Hey, share the screen.
Huh?
Share the screen.
Yeah. So that's one of them. I thought I was scared. I thought I was sharing my screen. I'm not.
No, we got the fresh cut.
What's happening here? All right, what are you looking at now? Are you seeing the Melly?
Yeah, we are.
Okay, yeah. So this is one that I think is it's a healthy stock. Mercado Libre is Amazon in Mexico, I believe. MELI. So that's it's another high mover. It's got an ATR of 51 at the moment. So this bad boy over here will make you some money, and if you're going to trade this one for, let's give it 41 days, might set you back about $7,000 or $8,000. But you can go in with debit spread on this guy. Let's go ahead and do the chat on this one. So 739.46. Put in the wrong place. 739.46. And resistance on this is about, anybody have any thoughts on that? 848.19?
Looks
Yeah,
right.
that's right.
Yes.
That's good.
So 848 minus 739,
Oh, that's close to 100.
it goes about 109, and let's go ahead and pick about 0.6. That gives us about $65 is what we're looking at for expected movement, right? So 65 plus 739, 674. Give or take. That's an approximate value, right? That's our EM60. No, that cannot be right.
Plus.
Yep. 804.
That's what I got.
This is why I like to draw them on the chat so that you can get instant feedback on how it looks. So there we go. So we're looking at 739 to 804, which seems accurate to me, because if we zoom in on this area, can we see that there's a lot of zones, that there's this kind of magnetic area that we seem to be testing a lot, right?
Mhm.
Yeah.
So that's the likely spot that we can land. So let's do the other number here, which is 739. Let's call it 740 plus 40, which is 780, right? And 780. So you all know what I'm doing here, right? So 780 to... No. 740 plus 20, 760.
Oh, yeah.
We're moving 20 points away from current price, right?
Oh, okay.
Yeah, 20 points away from current price is what we're looking for. So 60 to 800. I'd actually, because we don't have any strikes at 804, I'm pretty sure. So we can adjust this one to around $800. 800 price point. That way it's more realistic. So go to the chain here, and I lost my numbers here. 760 to 800. $760 to 800. So we can do a 5-point or a 10-point. I think this is overpriced at the moment. $3.30. So is that, well, that one looks better. That one's worse. So 65 to 7. 65 to 70 is what I would pick. 175. And then I'd try and get in either at 150 or just pick it up at 175. That's still good enough for me. And then you do the usual math and try and pick up about 100 or 200 bucks on this. So you all know what I'm talking about, right?
Yes.
Yep. There you go, Steven.
Thank you.
No worries. Goldman Sachs is another one of my favorite. The financials are coming back, and this one does represent a lot of the financials. You can either go with this one or you can go with American Express. If you like Bank of America, that's another one. The Qs, obviously, same story. The Russell 2000 index, actually this is the ETF, not the index. The index is RUT. This is the ETF. So IWM, if you don't play IWM, then there we go. Does anybody trade IWM? No? Okay. IWM is one of those. So, all right, you've got your plays over there. There's several plays for this week, a lot of them. I haven't updated this list in a while. I need to. This is my swing list. If anybody wants it, they can take a snapshot of this, or if you want, that's fine. Cool. All right, guys. What other questions do we have?
I got a question for you. I'm still presently in T row
Uh-huh.
elite. Where do you see it going? Because I'm still in the negative with that.
I see it going to 200.
See it going to 200. You know what I mean?
I understand. I understand. I think it's gonna come back up. They've been pretty hit. They've been hit pretty hard with some of the tech stocks that they have inside them because it's tech heavy. But if we pull out the, let's see, T-roll is, it went as high as the 200s, just the low 200s at November, right?
Right.
And it's been about 7 months since it was that high. If you've held it, if you're still holding on to that, we know that in about another 2 or 3 months, this thing is going to come back. Not necessarily the 224, but we're looking for it to get around the 200, around the 200 area. Yeah. So as the S&P does its thing, then I expect that T-row is going to come back. If you look at the trajectory on T-row, it has just been very, very strong over the last, let me just do 5 years here. Am I looking at the daily or the weekly? The daily. That's the daily, and let's just do all. Well, let's just do 5. I think it will come back. I'm not worried about T-row. How long do you have until?
Yeah, bought to the end of the year.
This year?
Yeah, this year.
Yeah, we're good. You got in at the 140, 150 level?
I believe so.
Yeah, you're within striking distance. Yeah, you're within striking distance of that.
I gotta pull it up to see exactly where I am.
Yep.
Hold on a second. Let me see if I can get it.
Yeah, I think I had got in at 198 because I own some T-row, but I also have some at 30 something, 38, give or take, way before even this low of 70. Because I've held for a very, very long time. Now the difference is that I bought the shares. I didn't buy the options, right?
Right.
Yeah, so that's a big difference. I own well over 1,000 of these. So just and these are in my retirement account, by the way, not in my day trading account. So
I'm waiting for that to. I'm waiting to have the money to start a retirement account with stocks.
yeah, for some of the longer plays, and I've mentioned this before, is my strategy is there are plays that I play only in my retirement account where I'm holding and I'm not even looking at them for 3-4 months. I study them carefully before I get into them and discuss them also with my financial advisor, and he says, based on what they have and what they've seen, this is the projection. It's just wait and don't panic. Don't look at them. So this is one of them. All right, guys. Is that about it? Bev, I'm surprised. I'm surprised you don't have a question.
Hey, Eddie,
Yeah.
this is Lasagna. Can you check your chat, please?
My chat. Yes. Okay.
Thank you.
All right. I will do that. I will do that.
Eddie,
Hey, what's going on, Bev?
yes, how are you? So I was watching the chart and I was thinking they almost look like they maybe started to form a W pattern.
Which chart are you looking at?
And the one on XPX is going up, but it's almost like the beginning of a W.
You mean like these go down, that goes up, then down, and then up?
Yes.
It could be. If it does that, you're going to be the new optionista.
I'm not sure if he's going to do it.
You're going to be the new chartista. You know, we're going to say, according to Bev, you know, we formed a W, and guys, what were you thinking? Right? I think it's possible. Nothing is impossible. That's the thing about these S&P, because the question still has not been answered definitively. Are we out or are we getting out of the recession? Are we avoiding the recession? That is the biggest question on people's minds. And then the other question is about inflation. Have we seen the peak of inflation? Right. So we're heading into summer. Gas prices they're about to hit the roof. But don't you worry, guys. You're going to be getting 18 cents.
18 cents.
Don't you worry. Don't, you know, 18 cents a gallon. That's going to take you far.
Very far.
It's going to take you very, very far. I mean, you might even be able to. You wouldn't even be worried if you miss your driveway and go onto the neighbor's, you know, mailbox. You'll be able to come back, no problem. Man. And you know, the funny thing is that I think they said that the oil people can actually keep it. They don't have to pass it on to the consumer.
Yeah, I saw it.
I was surprised. I was like, so who are you really giving this to?
Yeah.
You know.
Yeah, he was saying he wants them to do the right thing. Huh?
Yeah, when's the last time corporate America did the right thing? Not too often.
Keep that for the books, right?
Yeah. So I don't know. The jury is still out on that one, but it's coming, and that's if Congress says yes. By the way, and depends on who's making that decision on whether we want to vote for him in November or not, right? Because that's what it's all about. But anyway, I don't know.
Hey, Eddie, before you take off,
Yeah.
about those emails that we were talking about,
Yep.
did you send them? Oh, did you update?
You mean email to you? I think.
Yes.
Yeah, you should have. Are you talking about the welcome letter and all that?
No, I have that already. I'm talking about last week, which would have been what? This past Thursday. What date was that?
Okay. I'm going to have to check on that one, Clarence.
Okay. All right.
Yeah. But
Okay.
you should be in my, you are in my distribution list for class. And so if I sent anything out, you're certainly in it. And I also verified that I have your right email.
Okay.
So if you're missing something, let me know. But
Okay.
yeah.
Well, what we discussed on Thursday, I don't have that. If you send it out.
All right, I'll check it out.
Okay.
But yeah, let's take that one offline. So
All right.
yeah. Awesome. All right, Bev, that's all you got? W?
Yes. Thank you.
You're welcome. Thanks for bringing that up. What Bev is saying is, am I still sharing? Yeah, I'm sharing. So what Bev is telling us is that we tend to form V's and W's, peaks and valleys. That's what charts are all about. And SPX seems to be forming a W, right? This is an example of a W over here. Let me show you. So if I want to draw on my screen a W, this would be a W. All right, you see that? This would be a peak. This would be another small W, if you will, kind of. So we're either forming W's or we're forming V's. This is more of an elongated V over here. It's an ugly V, or I guess you could even call it a U. So what she's alluding to here is that this could be a W. Yep. So before we go fill up that gap, it's possible we could come back to that 37.15 or 36.36, test it, and then go back up. Yep. It is also
4,000.
what's that?
Said 4,000. Let's hit it.
Yeah, 4,000 will hit for sure. When are we going to do that? Is it next week or is it the following week is the question. If it's not next week, then for sure we're hitting this, at least 37.15 or down to 36. So a lot of analysts have been talking about this level. Right now, they're very, very quiet. They're very, very quiet because of what happened last week. But they could be shouting again next week, saying, "We told you guys. We told you this was the May rally, which is coming in late." So for that reason, you always have to have your tight stop loss. When you see green, don't be so sure that that trend is going to continue without being challenged. And then be sure that you're going further out in advance. If you're going SPX, obviously we go a little shorter. If you're going anything else with equities, then you can afford to actually go out longer, which is the recommendation, right? So if you're going with any of these other ones, then MongoDB is another one, by the way, guys. If you don't have MongoDB, you should. Or I do. I don't care what you have. So
Eddie, what did you say that is? A MongoDB?
MDB. MDB is it's a tech stock. They make databases, NoSQL databases. So.
And you said this is a long equity?
That's anything that is not SPX for me is usually a swing.
Gotcha.
Yeah. Anything
and
that
and XPX is usually a 0 DTE, or do you hold it maybe a week?
No, I don't hold it overnight.
Okay.
Yeah. When I trade SPX, it's always going to be I always traded 0 DTE. Everything else I feel comfortable trading overnight or even a few days.
Gotcha.
So remember, I usually have about 2 or 3 strategies going. I've got my 0 DTE strategy, I've got my swing strategy, and I have my longer term strategy.
Right.
Yep. So the longer term strategies are stocks or ETFs that I know are going to go for, I can hold a long time, 9 months, a year and a half. Those are great. Then my swing trades are things that are moving $20, $30, but they don't move all that $20 in the same day. They take their time to get there, usually, a few days. And then SPX, that one's just...
So do you recommend more than one account, or do you recommend just having those in? I know you had a long-term, your long-terms are in your retirement.
Yeah.
But swing, are you swinging and doing SPX in the same account, or do you recommend doing a different account for that?
It's up to you. For me, I like a different account because I don't have to look at it every day. Okay. Yeah, because I tend to panic a little bit when I start seeing the red candles. I'm human, so my emotions play with me when I'm starting to see red. I tend to cut the trade even when I have a good feeling, or when my calculations say that just hang in there, it's going to eventually go. So to prevent that, I just put them in a different account that I don't have to worry about. But I still put in the risk management to where there's that threshold that I believe if it drops below this point, it's no longer good, no matter what. Yeah. So that threshold again is determined by whatever thesis I'm working on. So it's not always $250. Most of the time it's 250, but it could be 1,000. Especially if I'm expecting that I'm going to hold something for a year and I'm looking for 6,000-7,000, then 250 is not reasonable to risk. Right? You risk maybe $1,000 or $2,000.
So leaps would be considered a swing.
Leaps are
thinking the
definitely
leaps are more
swings. They
long
just
term.
they just take a heck of a long time. And
Right.
and if you're going to do a leap, then I would suggest longer than a year, not just 1 year.
Right. Right.
Yeah, longer than a year, preferably 18 months to 24 months. And then make sure that you get out no less than 3 months to expiration. Right? 3 to 6 months. 3 to 6 months to expiration. And in fact, one of the best ways to play leaps is once you get into it, and you hit a few $1,000s, say however much it costs you. Let's say it costs you $5,000 to get in, right? Then if it has made 5,000, go ahead and get out of it, even if you're just 2 or 3 months into it, and then invest that 5,000. That way, even if you lose that 5,000, you're break even. So that's my strategy with leaps, because they tend to make money fast, really, really quick. Yeah, especially on those ETFs that track the S&P 500. Those do very well.
Great. Thank you. There are some gems that are taught like in between lessons. So I appreciate that.
No problem. You're welcome.
Agreed.
Here we go, Carlene. Carlene taught us about the bull today. Yeah. And this is a quiet crowd for Saturday, but I do understand. Saturdays are not your thing.
Yeah, I didn't get the notification earlier. I don't know. I guess I was just sleeping at Saturday. I really usually work on Saturday. So I appreciate you coming on and spending this time with us. So I just got the post for it.
Oh, that's all right. Today was actually impromptu. Next week I'm actually usually they're every 2 weeks, but next week is the 4th of July weekend. So I'm expecting that a lot of people are going to be either out of town or kind of disengaged, holiday mood kind of thing. So that's one of the other reasons that I considered here today. So next week I'm definitely tentative. Actually, I want to say we're not meeting next week. So cool. All right. And
Eddie,
yep,
it's Peggy. How are you?
I'm good. How you doing, Peggy?
Good. So I have a question. Yesterday I tried to play that gap on my live and I couldn't get filled. So I was going for the 30%. I even went up to like 175, but since price kept going up,
yep,
it was trading at like 255, 260. So I didn't get filled on live. I didn't even try to do it on Sim.
yeah.
But is there another strategy? It was a debit, by the way.
And what strikes were you trying to get?
I didn't write it down, but I think it was probably like 38.75 or like 38.80. And then I even went up to probably like 38.80, 85.
Okay. Do you remember what the current price was at the time?
I don't. I think I went about $30 or $35 up. So possibly, let me see.
Yep.
Yeah, I don't remember.
Yeah, and then this was 0 DTE, right? Or were you doing several days out?
I did the 7.
7. So
Yeah.
that would have been July 1?
Yes.
Okay. Yeah. That wouldn't have gotten filled. Notice that it's now trading at 3.5 or 3.15, but it's deep in the money. So I don't know why you were, well, I do know why you're not getting filled at your desired price of 150. You said at the time that you tried to buy it, it was over $2.
Yes, it was over $2.
Yeah, over
and
$2.
I went up to like 175, maybe even like 180, but it still didn't take. And then price just kept going up. So
Yeah.
I tried to cancel, and I did cancel and replace.
Yeah.
But I wasn't getting filled, so I just stayed out.
Yeah, it wouldn't get filled. Here's the reason. There's one part that we should understand or should already know with spreads, no matter what kind of spreads they are, whether it's a debit spread or credit spread, is that as the price is moving towards it, the value is increasing, right? So when the price action, especially with yesterday being such a bullish day, there is no chance that the price was going to come down. You'd have to actually go out way out just to get a good price if you're still trying to get that, one point something. The other way.
How far out would that have been, though?
Well, how far out would have been actually closer to closer to 0 DTE. So let's look at that 38.75, 38.80, currently trading at $3.15. But Monday's date, the same thing is probably costing, well, about $3.65, which is more expensive. I would say that yesterday's date, with the price action the way it was going, it would have been impossible to get it for less than $2. So I would have picked it up at that 170, whatever price it was. But that's not a good price based on what we know.
Right.
Yeah. I would have gone for a straight call instead of a debit.
Oh, okay.
Yeah. That's one of the few instances, especially when price is moving aggressively up. That's hard to do. So if you're trying to get into a debit spread and you want to do it anticipating that price is going to go up, on the day off is really not the day. But if we start seeing some green candles here and we know that we're targeting these 40, hopefully I'm still sharing my screen.
You are.
Then that's the time to start planning for this. So if I were to go for the 4100 or 41 something, knowing that eventually we're going to get to the 4168, I just don't know when. If we go by Bev, it's not going to be soon, right? She's still here. But if we're going for that 4100, then I'd definitely go quite a ways out here, maybe even 30-40 days. Let's look at the end of July. Gonna look at end of July, the 4100 area. Gonna give these 30 strikes. Well, I don't even have to go that far out. That is still tracking 230. This is going to be different Monday morning. Let's go 50 or 60. I'm looking for the 4100. Is that right? 4160, no, 4100 area. Yep, 4100. There we go. So in about 34 days, if I believed that it would hit that 150, that 4100 area, sorry, in about a month, then that would be the time to do it. And also, if that W did happen, that would be a good thing for you, for us, because then you'd be able to pick it up a lot cheaper. So I would wait for a slight pullback, whatever pullback that we can get before I go long, and I'd go many days out in order to try and track that 41. So the strategy here would be, instead of going for that $1.45, this is the kind of trade that I go in for like 50 cents, right? Just put it in at 50 cents, and I'm waiting for this pullback to happen, because I know there's going to be a pullback somehow before we start heading up. So the pullback could be, slight and then go back up, but it's that slight pullback that I'm looking for, and I've got many, many days, and I'd go about 45 on this one. Did I give you a hint there, Peggy?
Yes, thank you.
Yeah, go deep, go wide, go long, and just sit on it. So no stop loss on less than $1, right?
Right.
Yeah.
Okay, thanks, Eddie.
Steven, you didn't hear that. Yeah.
I've been doing a cowboy, leaving the stop loss out, because a couple of times I got stopped out. So
Got it. Yeah. Yeah. For those
just
60
try to
and
manage
50
it.
cents, you all know my strategy. If it's 50 cents, I'm usually going for the kill. And, you either ban 500 or make 4,500. One of the two. What's going on, Lynn? Welcome aboard. What say you? She is speaking, but unfortunately, I don't do sign language. So,
Hello?
somebody read her lips,
I'm
please.
sorry. I was muted. I'm sorry. No, I've been trying to catch it live, and I saw the message late. I'm like, shoot, I'm an hour late. But no, I've been watching your videos. I'm currently in Terry's VIP.
Awesome.
But I have to follow you for options. So, and because of you, I'm having a much better understanding. So
Awesome. Welcome to the club.
I'll be here more. I checked out the other stuff, so I'm just gotta try to make a little something so I can come in the other one besides the Saturday one. So
Exactly. Yep. Yeah. The Saturdays, except this is about the only one that is impromptu. Usually they're every 2 weeks, I would say.
Okay.
But next week with the holiday weekend, I think we're gonna scrap next week. That's what I'm thinking. So yeah, and I'll announce it early so that people can plan.
Okay.
Did you have any questions? Options questions? Everything going well for you?
Well, I'm still trying to get a grasp for the credit spreads and the debit spreads. I mean, I kind of have a grasp, but I don't have any questions quite yet. I don't want to.
Okay, that's cool. That's
nice. I'm
nice.
just practicing and studying, like every day.
Yeah, that's the name of the game. That's what we're all trying to do. Get better at and more consistent.
I'm going to try something different. I don't know. I did something crazy on Thursday with SPX. I got in too late. I don't know. Sometimes I get confused on selecting my strike prices for credit spreads. And I did one at like 348 and it didn't even go through. I think it expired and then part of it got rejected. And I tried to put it in because I know you teach like the sell to open, buy to close, and then I tried to do the stop. So I did like the OCO order, but it just kind of went left.
Okay. And you said you were looking at what strikes on that? The three, how much?
It was SPX. And I think for some reason I was trying to get in at, let me see. Because I look at it on my computer, but then I trade on my mobile because I use a Mac and it's just easy for me to pick up my phone and put it in a trade. Let me try to go back to it. It was, oh, here it is. I'm still trying to learn how to read it from my mobile. It was a put credit spread. Can you see this?
No.
Oh.
Well, bring it up again.
Wait, maybe it's because I have the background blurred. Wait, hold on. I'm gonna, let me move this. Let me take this off. This might help.
No, I can't see it. Yeah, it can't. And yeah, it's impossible to read it. It's too small. Well, just read the numbers to us.
Okay, it has a sale for 30-cent limit.
Okay.
The strike was 37.80, 37.75 was the put. There was one contract.
Got it.
And then I have, I'm just going to read it from my positions page. And then it was buy the stop and at 0.50 mark. Okay. And then the other part was a vertical sell at 0.25 limit. And then under that vertical buy at negative 0.10 limit, and then buy the stop at minus 0.50 mark. Does that make sense?
Yeah, I think I lost the numbers there, but it was a 37.80, 37.75, so it was a 5-point wide spread.
Yeah.
And you were originally going to get a 30 cents credit?
Yeah.
30 cents credit, and you were going to buy to close at 10 cents?
Yeah.
So you're looking for 20 cents.
That was dumb. I'm not that, I'm still trying to.
I haven't said anything yet, and I'm just smiling. So we're looking for.
It all says expired, canceled, rejected, canceled.
Okay, yeah. So depending on what time you try to do that, that would have been
3:48, and the part 3:57 is right before the 4 o'clock.
Oh, before it closes. Okay. Yeah. All right. No, I wouldn't even sell it to you. No. So that's living dangerously.
That was way too late. And okay.
Yeah, you were late by about 6.5 hours.
Oh, well,
Don't
okay. So Monday, I said what I'm going to do is I'm going to get in the morning because I know you said that, within an hour, you should be out of these trades, right?
Yes.
Okay. I have been learning from you.
Yep. So what Lynn is talking about is she's referring to a credit spread that she tried to get in late in the day, and she was trying to pick up about 30 cents credit, knowing that we were well over 3,800, and so she was going for the 37.80, which was actually close. You sure that's 37.80, right? That's not even 38.80, right?
What?
So you
37.75, 37.80.
okay? So and that's by my calculation, there it's approximately $100 away from where the current price was.
I was thinking, oh, it's almost 4 o'clock. It's not going to hit this spread.
Oh, you're right, and you are correct. However, who's going to sell it to you knowing that they're just giving you the money? Would you sell it to someone? No, you would not. Very unlikely. So, but also, this is a teaching moment here. You are introducing risk at the end that you would be unable to recover if something happened, if it turned around, for instance.
Mhm.
Because all you need is 10 minutes on the SPX. It can move points. We've seen it do that before. Right? On January 6th last year, we saw it move more than 100 points.
Mhm.
What happened? Somebody decided to riot downtown Washington. Right? And the market moved like crazy and took out all sorts of stops. And then it recovered in about another 15 minutes. Not to say that those things come in often, but there are times that we get on an assignment. A couple of years ago, you remember that all it took was a tweet, 1 or 2 tweets, and the market would go crazy. Thankfully, those things are not happening anymore. But at 3:45 p.m., that is not the time to introduce risk.
Okay.
You cannot. You're giving yourself no chance of recovery. Unless it is a multi-day DTE. If it is 0 DTE, you're pretty much saying, you know what, SPX, it's okay. You can take this money. That's okay. No worries. You can take it. But if you're kind enough, give me 30 cents. Also, that is too small of a payout to get on a credit spread.
Okay.
Try and go for at least 70 to 80 cents.
I could ever find a premium that high though.
Well, I'll show you how in a second here. Okay. Right? So 27 January is the next upcoming expiration, right?
Mm-hmm.
So where do you think this thing is going to go? Up or down?
Up.
Think it's going to go up? So if you were to sell, where would you sell? You'd sell below 39 something, right?
Yeah, well, I would say right under that candle, the green candle, like
below this point, below this gap.
Yeah.
So this gap is actually at 38.21. So you're saying that you would sell below 37.95, give or take.
Well, I'd be expecting the price to stay above the 38.21.
Okay. But there's still this gap. We could still come back and try to fill this gap.
Okay.
So if you want to have risk, then you want to be below 37.
Yeah. Okay.
95.
Okay, because okay, and I guess I'm understanding that because now I haven't been following SPX like that. I just started. I'm trying to force myself because I used to like to look at Apple, but I do recall everybody says SPX is known to go back and fill gaps.
Yes.
So, okay.
Yep. That's part of the reason. So that this 38.21 is forming support at the moment. It's a strong support, and we looked at it a few minutes ago to see why that was support, but it could come down and try and fill these 37.95.
Okay. So I should be looking below that candle, right?
Right. Because this is your true support. If it's coming down over here and it becomes a gap play, then this 37.95 is actually where it will be trying to fill, actually maybe a little bit above here because there's a wick. So that 3,800, that's psychological number. So it could be shooting for 3,800 before it rebounds. But the gap per SPX really is 37.95. So going to the chain here and assuming that this is what's playing out come Monday, Then 37.95 would be somewhere around. Let's see if there's any premium. And that's pretty far here. I'm just gonna go with 80. So 39.75, there's absolutely no premium, right? There's no premium here. When you say 0.05 or 0.10, that means there's nothing, absolutely nothing, right? So not even worth. If somebody sold this to you, maybe they're trying to solve something. I don't know, but realistically, there's nothing. So the way to sell credit spread is obviously no less than 6 points or 6 strikes away from the money. So it means that you have to introduce risk and go above that 38.21. If we have a temporary spike out, on the upside, and then as it decays, then you get out once you start seeing that red turn around.
Oh, okay.
The perfect trade for us would be to sell below this, but there is no premium here, so we can't do that. The next best trade would be to sell a PCS. You either do it at the money, right? Or, slightly over here, which would still, slightly out of the money. I haven't taught you this before, but there is a way to sell it slightly out of the money, not so deep out of the money. Get your move, and as it starts to turn around, then you get out, which means that you're collecting a lot of premium at this particular moment. So let's look at 38.90 to see what's happening.
Okay.
So if I look at 38.90, it looks like I can collect what, $1.75.
Okay.
Right? $1.75. The risk there is $3.25. Not bad.
Yeah. Wait. What? Where'd you get the? I see 120. Why does it say 175?
I just clicked on it, and I should get the median between the bid and the ask. You got your calculator with you today?
Gotcha.
All right. Pull out your calculator. Do 120 plus 230 divided by 2.
Oh, okay. Okay. You say 120 what?
Plus $2.30. Divide by 2.
Okay, gotcha. Okay.
That's how you get this price.
Okay.
It's always the median, the bid, and the ask.
Okay.
Right? Always the median. So you can get $1.75. Let's assume it's 9:35 in the morning, and you get in at the money because we had a breakout at the top. You're no longer looking for 20 cents. When you get this kind of premium of $1.75, you're not looking for 20 cents to buy it. You know how much you're looking for?
With that'll be $175.
How much would you put your buy to close?
Buy to close would be you said what 1x, is that? No.
I think you're thinking two things. You're thinking about your stop loss. I'm just thinking about your take profit for now.
Oh, I'm drawing a blank.
Would you be happy selling it, buying it back at $1?
Buy it back at $1? Yeah.
Would you be happy buying it back at 125?
That's going into my profit more.
Yeah, but how much profit would you be making if you bought it back at 125? 50 cents maybe?
Yeah.
Much better than the 30 cents?
Much better.
Much better, right? Which one is more likely to happen, the 30 cents or this one?
This one here.
I think so. So you're going for a higher probability by going with this one, which is just slightly out of the money. You're getting more credit. Your thesis should be that if we hit that 39, the next whatever the next resistance here, you should be out. So this should be a 30 to 45 minute play.
Okay.
Right.
And looking, Okay, and then I have to look on a 15-minute chart to be sure to get out when it starts to turn around.
I went into the 15-minute chart to show you this gap.
Right. Okay.
That's why I'm looking at the 15-minute, even though I do trade on the 15-minute, and this is important to be able to see this kind of gap. To show you a bigger picture, let's look at a bigger picture here. The bigger picture here is that we're going for that 4,000. That is if we're going, and if we're going up, then this 38.95, that 3,900 level becomes very interesting because it will decay very, very quickly.
Okay.
But that's almost in the money, right? But you're not that far. It is much, much better doing these early in the morning when you have a chance to recover than trying to do this in the afternoon when you have 15 minutes.
Okay.
So get out of the business of trading after 2 o'clock on a vertical spread.
Okay.
Yep, don't do it. Don't do it. So
I have a question for you.
Sure.
Those Saturday sessions, are they open to everyone?
Yeah, anyone. Invite your cousin, buddy.
Well, that's why I'm asking.
Yeah, tell your neighbor to hop on.
Yeah.
I'll
So how do the general public find out about?
Oh, I posted on the public options with Eddie on Facebook.
Okay.
Yes.
I thought that group was private, isn't it?
There's two private. There's a private group, the one that you're a member of, and then there's options with Eddie, which is public.
On Facebook.
On Facebook, yes.
Okay, I'll tell my friend.
Yeah.
Great. Thank you.
Yeah, you're welcome. Yeah, tell your neighbor.
Yeah, it was somebody from the program. I was telling her about you, and then
Yeah.
you can join those Saturday sessions. I said, well, I think you could, but let me confirm it.
Yeah. That's no problem. Yeah, if they go to public school, that's cool too.
Fair enough. Thank you.
You finally give a joke, Eddie.
We don't discriminate, man. So if they're going to public school and yeah, it's it's all right. They can come over. No worries. We'll convert them and see what we can help them with. So, what's your question, Shamaine?
Okay, I have a question related to this particular conversation you're having about verticals.
Mm-hmm.
And I'm trying to time it. So with this particular vertical, because we are expecting that gap to fill,
Mm-hmm.
we're getting in earlier than, say, a half hour wait to see which market movement.
Yep.
I just want to be clear on that timing situation.
Yes.
Okay.
So yeah, on that particular play, obviously it would be a PCS, right? Put a credit spread. That's why we are on this side.
Right.
And the normal rule, the standard rule that I always teach is you need to go no less than 6 strikes away, which I'll be counting 1, 3, 4, 5, and 6. Then I'd be on this 7th one, the 38.75.80, which would give me about $1.40. And that's great. If I did that, then at the $1.40, I'd try and get out at about maybe 50 cents, 30 cents, whatever. Right? But
all right. That was clear. Thank you.
Yep. So that would be the normal thing to do. That's if you're trying to improve, 2 things: probability of success, and also manage risk the right way. Then you'd be going 6 deep, undo, throw a cut, success. Then over here on the 7th one, that is where you would be, right? And that would still give you $1.40. When you have this much premium, don't go looking for 20 cents to buy it back.
Right.
It's okay to get out at 40, 50 cents if you have to. And the reason you would do that is if those candles started, coming back. If we hit that 39.74 resistance and we bump hard into it and it retraces, that's your time to get out. You don't wait to see whether it's going to break. You get out. You've already made your 50, 60, 70 cents times however many contracts you have. No need to give that back. Now, if it turns around, breaks the resistance and goes on and fills a gap, that's okay, right? That's cool too. You still met your goal. And that's the way that I would do that. And remember, this is a PCS. The only time that I would, well, no, there's not that many times I would let it ride. But if it went up, broke these, like, dude, man, I'm breaking these, and it's going for that 4,000 level, then you can wait and buy it back 10 or 20 cents. Either way, don't let it expire worthless.
Right.
Yeah, you never leave that risk on the table. My policy also with credit spreads is if after about an hour I am still in that spread and it has not met my goal, right? That's part of the thesis, because there's a time component. I am expecting that it should decay, or theta should attack it very, very, very aggressively, and within 1 hour it should have decayed significantly enough for me to get out. I've tried these. I've tried several strategies, many strategies. I've even tried at the money strategies. For instance, immediately at the open, on at 9:46, once I see what side we're breaking out, and if we go on the other way, then I might be tempted to even get in at this, at the money spread, get that 220. If I'm getting 220, 250, I have a lot more flexibility. Right, especially if I'm getting in at 2.5. If I'm getting at 2.5, I will play with that thing. I'll play my own tricks with it, because my risk is half and half. You've already given me 250, right? And the most I can lose is how much? 250, right? It's real. Those numbers are real. So I'm usually expecting a decay maybe of about $1. So once I go down to 120, the risk starts starting around. I don't want to break even. I want to pick up that $100. Go ahead and get the $100. Right. So, Lynn, to your point, by the way, if you're going to play that late in the day, you don't need to be picking up 30 cents. You need to be picking up at least $3 to $4.
Okay. Well, I'm not doing late in the day anymore.
Yeah.
Monday morning, I can't wait till Monday. I'm going to try this in the morning.
Yeah.
And I have a question. As soon as that first candle starts, when do you know, like, do you ever get in on that first candle, like at 9:30 to 9:45 candle?
No. You need the second candle. Sometimes you need a third candle to tell you, to give you all the information you need. Okay. On the first candle, you don't have enough information. Yeah, there's not usually enough information on that, and let's just look at that. So I'm gonna go the 5-day 15.
That confuses me sometimes too, because I'm like, sometimes I feel like I'm looking at the candles and I'm just like, which way is it going? And then I look at the futures in the morning. I go through the news and I'm looking at all this stuff, and then it's just I'm still working on. It's like I know the individual pieces, but then putting it all together, it just gets jumbled up in my head or something. And
yeah. Friday is, I don't know whether this is a good example here, but yesterday, this candle was very, very strong. Obviously, we had a good jump over here from Thursday. So we had good information there. But if I break this one down, let's go to the 5 minute. So we did have a little bit of a pullback. You see that? So then you don't know. Okay. I'm looking at the 5 minute here. Wait, am I looking at the right thing? 3:13, make sure this is the right day. Yes. So all of this is yesterday. So we jumped up. This 5 minute gives you a little bit of pause. Okay. You don't know whether we're now going to come back down because it was a huge jump. Are we going to try and fill the gap? Then you go another 5, 10, 15 minutes. You see this red candle. You're still not sure. That's why you need that whole 15 minutes. There's more information that I provide that will help you on that second candle to help you get more information about how do you actually decide, when to get in. So, but there you go.
Okay.
Yes. So you understand that if you're going to play late in the day, why you should get more premium, right?
Yeah.
Yeah. Because
Yeah.
it's, at the end of the day, this is what happens. You almost all a long week at the end of the day, or, going in whatever direction, depending on who's controlling what. But you might be so sure that, a CCS at this particular moment at 4,000 would have been, at 3,900 would have been the right thing, since we were just needed to go to 3901 to fill the gap. You remember the gap was at 3901, right? This is the gap that we're talking about from over here. We just needed to come up to this point. That gap is filled. If your thesis was that above 3,900 you were safe for the whole day, it was okay until the last 10 minutes. That's what happens when you have, especially when we had that consolidation. Anytime you have consolidation, and I'm reading the candles here, the candle formations, this is called consolidation. Okay. You must have a breakout. The question is, will you break out to the top or will you break out to the bottom? If you've had a really strong green day and ES was tracking, some huge numbers, the breakout is going to be the top. But it could go the other way. You never know. That's the point. So most of the time, there's usually going to be a breakout after a consolidation. Actually, not most of the time, all the time. Every time you have consolidation, you must have a breakout.
Okay.
Not just on the last 15 to, not just at the end of the day, but even during the day, there's a reason for consolidation. Right? You're building momentum, you're gathering steam, or you're losing steam, or you're testing a particular area. The test either fails or it succeeds. If it succeeds, we break it, we run up to the next. Right? If it fails, we drop, we go down to the next one. So
that's the tug of war between the buyers and the sellers.
Yep.
Right?
You could say that.
Okay.
That's another analogy that I have heard said, and it is valid.
Okay.
The tug of war. So one of my good friends calls it a meeting of the banks. So, all right. There's a lot of interest in credit spreads. I know they've been preached a lot. There is significant risk, but there's also significant payout. I'm on the fence about whether they're still a good thing or not. So
I'm just frustrated. I'll just be glad when I get this.
Hit me up, optionswitheddie.com.
I've been there. I want to do it.
Yeah. Okay. Well, just schedule 20 minutes with me and let's talk about it.
Okay.
Yeah. Just schedule 20 minutes. So there's no charge on that. And let's talk about it and see if we're a good fit and whether I can help you.
Okay.
We'll see where we are. Yeah.
I'll schedule that right after this call.
Do that. Yep. Those are free to discover where we need to be. So.
Thank you.
You're most welcome. All right. Anyone else have a question before we?
Okay, Eddie, I have a quick question if no one else does. I don't want to take up the time, but
sure.
When you scalp, because that's something new that I'm doing and I've been very profitable. However, I wanted to ask, are you using the same trading plan or do you have a target or you just go in and get whatever you can and get out? I just want to make sure that I'm following some kind, because right now it's just wild west. I have to be honest with you.
Yeah.
Oh no.
It must be funny for Caroline. No, I'm following the plan. I've shared, you remember the options trading plan that I've shared with you. It is still valid even if you are doing a short-term play. You still have to get in at the low. Let me see whether I can bring up some notes here. And I'm probably not sharing. Am I sharing? No. Okay. I'm just looking at my notes, my trading plan, and you should have this.
Yeah, I have it. I just wasn't sure if you followed the plan with scalping. If that's the case, I'll go through the plan. I just wanted to.
Oh, absolutely. Yes.
Okay.
Yeah. I do follow the plan. I mean, the playbook does not change for scalping, for swing trades, for day trading. The playbook does not change.
Okay.
The only thing that changes is the strategy that you apply things a little bit differently. So the calculations are different, but the playbook is still the same. You're still getting in at that optimal moment. You're waiting for it. You're not just jumping in, by the way. You're waiting, right? So we know how to get in at that formation, at that level. We've talked about which candles to get in. So you need to know that. And then you also have your expected movement. Super, super important. And if you're going zone to zone, which is what you're doing when you're scalping or when you're doing a swing trade, regardless, you're still looking for that minimum movement, right? So we're not going for, $10, $5 scalps. That's for penny stocks, right? And we don't do penny stocks. We're looking for $10, $20 movements. On SPX, you can get that candle to candle or even zone to zone. And what you're doing on the 15, that's what you're watching, because I trade on the 15. You're getting it at the bottom or you're getting it at the top with a put or with a call, whatever the case may be. And you're going to the next zone. Or you want to get out before you hit that zone. So either mentally or by calculation, you've done your 60%. Right? If I'm scalping, I don't even go to the 60%. I will normally go over to about 50%. Right? Because you want to get, especially if you had a strong movement, $15, $20, and you've already picked up $500, $600, no need to give it back. Right? Cut the trade, wait for the next zone, and you repeat that. If you're doing that, make sure that you don't have PDT rule restrictions, because those will mess you up. If the price turns around and you don't have a way to correct it, then that's bad. Stop loss.
Okay.
Yep. Always got to go with the stop, especially when I'm scalping, because it's high speed trading. So you just have to protect yourself. That's one painful lesson that I have learned. I used to do it without a stop loss, but man, those can be nerve-wracking and painful. So good question on that.
Thank you very much.
No problem. All right, Gloria, I think you got us when we're saying bye-bye. We're saying see you next week. How's it going? Cool. Any other questions? Right. Very, very cool. All right, for the folks who are new, my email, I'm going to type it in here, is info@optionswitheddie.com. Go ahead and contact me if you need additional help. Yeah. Right, everyone, it's a wrap. We will see you next in 2 weeks. I'm pretty sure next week we're going to take the 4th of July weekend off. So
Thank you so much.
all right, guys, adios.
Bye.
Thank you, Eddie.
Thanks, Eddie.
Adios, Eddie. Thank you.
All right, bye-bye.
Bye.
Not signed up.
Thank you, Eddie. Bye.
Mr. Eddie.
Yes.
Did you say no class on Thursday? This coming Thursday?
No, I'm not. I'm not talking about Thursday. I'm talking about Saturdays with Eddie.
Oh, okay.
Yeah, I'm talking about.
We still good for Thursday, right?
Yeah, no, the Thursday class is still on.
Okay.
Yeah, we're still meeting on Thursday.
Okay, thank you.
Sure.
Thank you.
All right. Bye, bye, guys.
Bye.